Taking a look at the S&P 500 as we get ready to trade Friday, April 3rd, 2020, with the non-farm payrolls report and services PMI numbers that start coming out tonight and finish with us in the U.S. tomorrow right after the open. Anyway, taking a look first at the 5-minute chart. We just take a 5-minute chart and post daily chart levels on it to watch how price reacts around it. And clearly the last 2 days, the main overhead level that we've been coming up against for resistance is this 25.29 level. This goes back about 3 weeks since the beginning of March. This has been a great support resistance level. When we get above 25.29, our next level is 25.70. We kind of usually grind a little bit between 25.29 and 25.70, but as long as we're above 25.29, it's really better to be in calls than it is to be in puts. When we come up to 25.29, that's your entry to get into some puts if we come up there and fail. And that really would have worked great for you today because our high was a look above and fail at this level. And at the end of the day, you got a second chance to get into puts if you were into it, if you were disciplined enough to ignore this rally at the end of the day today, and you bought some puts, you probably got a great deal here at the end of the day as well. Below us is our 10-day simple moving average. This had been in the rearview mirror. We had put in 5 closes below it. I'm sorry, above it for 5 days in a row. And then yesterday on Wednesday, we traded down intraday and broke it and chopped around. And then at the end of the day, took a really hard break of it. Tried to recover it into the close, but missed that and closed below it and broke our streak at 5 in a row. Didn't get our 6th one in the row. Well, today we opened below it. We set our low of the day right here, making a little bit higher low than the one we made yesterday, and then rallied up, failed at this 25.29 level, chopped around. At the end of the day, we broke this again, but we made another higher backtest low against the low earlier in the day and regained that 10-day and rallied back up. So these are the things to keep in mind. If you get into some puts up here at 25.29, we got to break the 10-day and stay below the 10-day. If we get below the 10-day and we make another higher low against the one from Wednesday and here on Thursday, here was our low of the day today, right off of the open, that's a pattern of a third higher low, and we're probably going to just take out the 10-day and keep going. So you might as well just take your puts off there rather than waiting for the confirmation of the 10-day, which is what I had been doing, but I don't think that you need a third time to show you that if we make a higher low and retake that 10-day, we're probably going to go on and rally from there. So just wanted to show you that on an intraday chart. Here's our roadmap, our daily chart, where we take all our key levels from to begin with. If we come out of the gate tomorrow and we are above the 10-day simple moving average, our 20-day is moving down here to that, it's going to be right in there at that 25.29 level. We get into this little resistance zone above that to 25.70. And above there, we start working on the highs that we've made so far. We've failed 3 times around this 27.40-ish level. This represents where our 200-week simple moving average is. If we get all the way up here tomorrow and fail to close above here, that's going to be our 3rd weekly close in a row below our 200-week simple moving average. And that's very key. I will show you that on the weekly chart before I finish the video. If we come out of the gate tomorrow and we are weak, if we see some horrible services PMI numbers tonight and it starts pushing futures down, if we come in tomorrow and we get a bad non-farm payrolls number, which we know we are, but I mean really bad enough to really spook the market, we'll open below the 10-day and we're going to finally take a look. We're going to break our lows that we've made Wednesday and Thursday, make a lower low on the week, and we're going to come up against the halfway back point for this whole rally that we've had from the 2020 low, and that's 24.1663. If we break below this, we are much closer to the 2020 low than we are to the bounce high that we've made. We're going to go after and test this gap, this huge set of gaps here that takes us back down. Actually, it's one gap that takes us back down here to the 2020 closing low. So that's 23.44. This is where I thought we had a potential of falling to today when we broke that 10-day in the afternoon. But we didn't. We got some news and we got rallied back up again. So if we come in tomorrow, break this 10-day, come down, break our weekly low so far over here from Wednesday, and we break down below 24.16, we're on our way to continuing further to the downside. If we have a bullish day tomorrow, I'm going to circle back here. If we have a bullish day tomorrow and we, at the end of the day, we are not above this I'm sorry, 26.4563. That's where the rising 200-week simple moving average is right now. And you can see here is one weekly close below it. Here's a second weekly close, and then here we are working on our third one. If we are at the end of the day rallying above 26.45, but fail it at the end of the day and close below it, I think I know I'm going to buy some puts. If we get up here and at the very end of the day we're sitting below this, but take it out at the end of the day, I don't want to be in puts. I would rather actually press my bets in calls instead. So this is a really key level on a closing point tomorrow. If we come out of the gate and we're well above this, and at the end of the day sell off and break below it, that's going to be bearish. Okay. Hopefully I didn't already repeat that, because I've shot this video a couple of times already tonight. Sometimes I forget what I've already said. But anyway, that's going to be our key level to end the day and the week tomorrow. Okay, that 26.45 and change. Okay, if you want to just look for 26.46 to give yourself, for sanity's sake, then you'll know that we've closed below it. Okay, have a great rest of your evening. Hope this caught you up on where we're at. As always, good luck and good trading.